You've probably seen it all over the news for ages now, the Western sanctions on Russia, especially after Crimea in 2014, and then, well, really ramping up after the 2022 invasion of Ukraine.
Absolutely. And the general idea, the common understanding, was that these sanctions were meant to be pretty devastating.
Yeah, to hit the Russian economy hard, hit their ability to, fund the war effort.
That was definitely the intention. The sheer scale of them, particularly in 2022, led most people to expect a really significant economic collapse, almost.
Okay, but that's kind of where our deep dive today begins, because the story isn't quite that simple, is it?
Not entirely, no.
We're looking into why that expected crippling effect hasn't really fully played out.
No.
We've gathered quite a bit of information looking at Russia's surprising resilience, how global trade has shifted, the real world problems with actually enforcing sanctions.
And some effects that maybe weren't predicted at all.
Exactly. So the aim here is to pull out the key insights, give you a clear picture of this really complex situation, but, without getting totally lost in the weeds.
And I think a good starting point is that initial gap between the forecasts and what actually happened.
Right.
Back in 2022, you had predictions of Russia's GDP dropping by, 7, maybe even 11%.
Which sounds huge. I mean, that's a massive economic shock.
It would be. But the reality,
Yeah.
the actual contraction in 2022 was much smaller, more like 2.1%.
Okay.
And then, even more surprisingly, the IMF figures for 2023 showed the Russian economy actually grew by about 2.2%.
Growth after all that. So, okay, the big question is how? How did they manage to avoid that predicted crash?
Well, it's a mix of things.
Yeah.
First, you can't ignore Russia's inherent advantages, their natural resources.
Oil, gas, minerals, the stuff the world still needs.
Exactly. Demand for those didn't just vanish, even with sanctions. So that's a baseline income stream.
It's hard to just switch off a supplier that big on the world stage.
Very difficult.
Yeah.
Then you have the actions of the Russian government and their central bank. They moved fast.
Like when the ruble crashed initially.
Precisely. February 2022, the ruble plunges. What do? They hike interest rates dramatically, up to 20%.
20%? Wow. That must have slammed the brakes on borrowing.
It did, but it also made holding rubles much more attractive, stopping the free fall. They also brought in limits on foreign currency withdrawals, capital controls.
Basically making it harder for money to flee the country.
That's the idea. And, it worked surprisingly well in stabilizing the currency. By April 2022, the ruble was actually back to its pre-war value.
That quickly.
Yeah, and reports suggest something like 90% of the money people pulled out in that initial panic eventually got redeposited.
So they managed to calm the immediate financial storm.
They did. But beyond that, there was a bigger shift towards what some people call a war economy.
Military Keynesianism, is that the term?
That's one phrase for it, yes.
Yeah.
Essentially, it means a huge surge in government spending, specifically on defense.
Pouring money into the military and related industries.
Right. Defense spending hit a record high, about 6% of GDP. That spending creates jobs, boosts production in military factories and related sectors.
So even if consumer spending is down or other sectors are struggling.
The military-industrial complex is getting this massive injection of cash, which props up the overall economic figures.
But there's a cost to that, right? You're pulling resources from elsewhere.
Absolutely. It's a major trade-off. Resources, workers, investment, they all get diverted away from civilian industries, from things that might drive longer-term, broader economic health.
So a wartime economic footing. Okay, but who are they trading with now? The West has obviously pulled back significantly.
And that's the other massive piece of the puzzle. The Western sanctions, however broad, weren't global. Key countries didn't join in.
You're talking China, India.
China, India, Turkey. They become absolutely crucial trade partners for Russia now, filling the gap left by the West.
Just how big a shift are we talking about?
It's enormous. Look at Russia-China trade. It hit $240 billion in 2023.
$240 billion.
Yep. That's up something like 70% from 2021, before the full-scale invasion. And think about critical goods. China now supplies maybe 90% of Russia's semiconductors.
Even Western-branded ones, sometimes.
Often, yes, rerouted through China. So attempts to cut off technology face these alternative supply routes.
And energy, oil and gas.
India and China have massively increased their imports of Russian oil. India especially went from buying very little to being a huge customer. This provides Russia with that essential energy revenue.
So these countries are buying Russia's exports and selling them the goods they need.
Pretty much. And that leads to this phenomenon called trade deflection.
Meaning goods find their way there indirectly.
Exactly. Goods might be shipped to a third country, say Kazakhstan, Armenia, Turkey, and then re-exported to Russia.
Like Kazakhstan's electronics exports to Russia jumping.
That's a perfect example, an 18% rise in 2022. It's highly likely a lot of that was Western tech finding a backdoor route.
A detour around the sanctions.
You got it. And it's not just overland trade. Russia adapted at sea, too, with this so-called shadow fleet.
Ah, yes, the uninsured tankers.
Right. Older tankers operating outside Western insurance, outside Western shipping regulations. They allow Russia to keep exporting oil, often bypassing the G7's $60 price cap.
So they found ways to move the oil and sell it, potentially above the cap anyway. That sounds like a big loophole.
It has proven to be a significant challenge to the price cap's effectiveness.
Yeah.
Plus, the world still needs Russian commodities, not just energy, but fertilizer, grain.
So there's always going to be some reluctance to cut everything off for fear of global price spikes.
Exactly. Even in Europe, heavily reliant on Russian gas, there was hesitation and, for a time, continued indirect purchases because the fear of economic chaos was just too high.
The global economy is just so interconnected. Making a clean break is harder than it sounds.
It really is. And that brings us to weaknesses in the sanctions themselves, how they were designed and, maybe more importantly, enforced.
Okay, so where did the sanctions regime maybe fall short?
Well, one issue was the timing. Many sanctions, like the EU oil ban, were phased in gradually.
Giving Russia time to adjust.
Precisely. Time to find new buyers, set up new payment systems, reroute supply chains. That adaptation window was critical.
Timing matters. What else?
Enforcement. We mentioned the oil price cap reports suggest many deals happen above $60 using intermediaries and that shadow fleet. Enforcement is patchy.
The intent is one thing, making it stick is another.
And it hasn't been uniform across the West either. Some European countries, heavily dependent on Russian energy, were slower or more reluctant to fully cut ties. Remember, Germany's reliance on gas.
Right. Until Russia turned the taps down themselves.
Exactly. And there was even that slightly awkward instance of the U.S. Department of Defense indirectly buying Russian oil through intermediaries.
Really? That does highlight enforcement gaps, doesn't it?
It certainly does. Then there are loopholes for things like dual-use goods.
Stuff with both civilian and military applications.
Yes, things like advanced machine tools, electronics, components that can reach Russia through complex chains, often via countries not applying sanctions. It's hard to track and block everything.
Like trying to plug leaks in a very leaky pipe.
A good analogy. And you also had inconsistent behavior from Western companies. Some left Russia immediately, what's called self-sanctioning.
But others stayed or found ways to comply legally while still operating.
Or just didn't have the systems to really monitor their supply chains effectively, meaning sanctioned goods might slip through unintentionally.
So a combination of deliberate evasion, loopholes, and maybe just complicity. Okay, were there any unexpected side effects? Things that maybe even helped Russia?
Yeah, some counterintuitive things happened, like the asset freezes on oligarchs. You'd think that would hurt.
Right. Seize their yachts, their mansions.
But the fear of seizure actually prompted some of them to bring money back into Russia, repatriation of capital, which then boosted domestic investment somewhat.
Huh. So trying to punish the elite inadvertently pushed money back home.
In some cases, yeah. And similarly, financial sanctions that trapped Russian money inside Russia. Well, that money had to be spent or invested somewhere, so it potentially fueled local spending.
Because they couldn't easily move it or spend it abroad.
Exactly. And strategically, being forced away from the West pushed Russia to strengthen ties with China, India, the Gulf states, creating this alternative network that's inherently more resistant to Western pressure.
They diversified their partnerships, essentially.
They did. And let's not forget the impact on the West. High energy prices, inflation, especially in Europe.
That definitely caused economic pain and political friction here.
Absolutely. Leading to pushback against sanctions in some quarters, divisions that, Russia could potentially exploit.
So the pain wasn't just one-sided. Now, what about inside Russia? What strategies did the government use domestically?
Well, there was a strong propaganda effort, framing sanctions as Western aggression, trying to rally nationalist support.
Us against the world sort of thing.
Pretty much. They also used subsidies and social spending to try and cushion the blow for ordinary people, control prices, support incomes.
Trying to maintain stability on the home front.
Right. And as Western companies left, you mentioned over 1,200 pulling out.
That must have left big gaps.
It did. And the state or state-linked companies stepped in to fill some of those gaps.
Yeah.
especially in areas like car manufacturing or consumer goods. Plus, there was a big push for import substitution.
Making stuff domestically instead of importing it.
Yes. Trying to become less reliant on Western goods, though, sometimes the quality or sophistication might not be the same, but it creates domestic activity.
And opportunities for local Russian businesses too, presumably.
Definitely. With Western competitors gone, local firms had more space to grow. So a significant reshuffling of the internal economy.
Okay, just to grasp the sheer magnitude, how many sanctions are we actually talking about?
The numbers are pretty staggering. By early 2025, estimates suggest Western countries, US, EU, UK, Canada, others, had imposed over 17,500 individual sanctions targeting Russia.
17,500, that's hard to even picture.
It's unprecedented.
Hmm.
The US alone sanctioned over 2,500 individuals, companies, ships, planes. The EU rolled out 14 different sanction packages by mid-2024.
And what did these actually do financially?
Key measures included freezing around $350 billion of Russia's foreign reserves, about half their total, blocking assets of roughly 70% of the Russian banking sector.
Cutting them off from their overseas money.
Largely, yes, kicking 10 major banks off the SWIFT international payments network. Plus, major restrictions on exporting energy technology, advanced tech, luxury goods to Russia.
So a really broad attempt at financial and technological isolation.
That was the goal.
Hmm.
And a huge part of that financial pressure led Russia to actively try and move away from the US dollar.
Right, this whole de-dollarization push. How does that work in practice? How do you trade internationally without the world's main currency? The dollar's been dominant for so long.
It's been a major adaptation driven by necessity after things like the SWIFT bans. The biggest shift has been towards the Chinese yuan.
Using China's currency instead.
Increasingly, yes. By 2023, maybe two-thirds of that huge $240 billion Russia-China trade was settled in either Russian rubles or Chinese yuan, not dollars.
Two-thirds. That's substantial.
It is. And if you look just at Russian imports from China, the share paid for in yuan jumped from maybe 4% before the war to around 23% in 2022. It's a clear trend. Using yuan for both exports and imports with China is way up.
So China's currency is becoming a key alternative for them. What else?
India is another interesting case. India started paying for some Russian oil in Indian rupees.
Okay. But the rupee isn't easily traded globally, is it?
It's not freely convertible, no. So what happens is Russia builds up these large rupee reserves in accounts in India. They can't easily swap them for dollars or euros.
So what do they do with them?
They mostly use them to buy Indian goods, electronics, pharmaceuticals, other things. It creates this sort of closed loop, bypassing Western financial channels. Some have compared it to old Soviet India trade mechanisms from the Cold War.
Almost like barter, but using national currencies within a closed system.
Kind of, yeah. Russia's also pushing hard to use its own currency, the ruble, for trade with countries it deems friendly.
So trying to get other countries to accept rubles.
And pay in rubles. By early 2025, the ruble share in Russia's export and import payments had definitely increased, while the share of dollars and euros, what they call toxic or unfriendly currencies, had dropped quite a bit.
A very deliberate pivot. Are other currencies involved?
Yes, they're using others too, like the UAE dirham, the Turkish lira, for trade with partners who aren't part of the sanctions. And they're exploring more novel things too. Digital financial assets, maybe using gold more directly in trade, even straightforward barter deals with places like Iran.
Sounds like they're throwing everything at the wall to see what sticks, financially speaking.
Yeah.
Anything to avoid the dollar system.
That seems to be the strategy, and it has allowed them to keep trading with key partners. But it's not without problems.
Like what?
Well, it increases dependency, especially on China. And dealing in some of these other currencies can involve challenges with liquidity, just not being able to easily buy or sell large amounts, and exchange rate volatility. The ruble itself has been quite unstable at times.
So workarounds, yes, but they come with their own headaches. Okay, looking beyond the immediate picture, what about the longer-term economic damage for Russia?
Because while they've shown this short-term resilience, the long view looks considerably tougher. There's the brain drain issue.
Skilled people leaving the country.
Exactly. Lots of tech workers, academics, entrepreneurs have left. That's a long-term loss of human capital. Then there's the restricted access to advanced Western technology.
The semiconductors we talked about and other things.
Yes. It hits industries like aviation, hard-keeping Western-made planes flying as a challenge. It affects advanced manufacturing, energy extraction. Relying more on Chinese tech might fill some gaps, but it also makes Russia more dependent on Beijing, potentially weakening its own leverage.
So a technological downgrade almost, or at least a dependence shift.
Potentially. And that war economy focus,
Yeah.
it drives inflation. We saw interest rates hiked again, went to 21% by February 2025, partly to combat rising prices fueled by all that defense spending.
Which also crowds out investment in other areas.
Right. Money going to tanks isn't going to hospitals or schools or diversifying the civilian economy. Economists estimate Russia's real GDP is probably 10, maybe 12% lower now than it would have been without the war and sanctions.
A significant hit to potential growth.
And disposable income for average Russians, down maybe 20-25% compared to pre-war trends. So the long-term economic cost is very real, even if it hasn't forced a policy U-turn yet.
Those are definitely major headwinds, even if they haven't caused that immediate collapse some expected.
The pressures are cumulative. They build over time.
Okay, so let's try and wrap this up. Summing up our deep dive, it feels like the Western sanctions, despite being massive, didn't deliver that knockout blow, at least not yet. And the reasons seem to be this mix of Russia's own adaptability, finding new trade partners.
The ability to redirect those trade flows, absolutely. Plus, the inherent difficulties in designing and enforcing sanctions perfectly in a globalized world.
Right, the loopholes, the enforcement gaps, the third countries, and even those unintended consequences like capital coming back.
That's a fair summary. And we've seen this really determined and partially successful shift by Russia away from the dollar, leaning heavily on the yuan, the rupee, the ruble itself, forging these alternative economic pathways with China, India, and others.
Which has been key to weathering the immediate storm. But, as you said, while they've shown resilience now, there are these significant long-term clouds gathering: the brain drain, the tech access limits, the inflationary pressures of the war economy.
Exactly. The long game looks much more challenging for Russia's economy.
Which brings us to, I guess, the final thought for you, the listener, to chew on. Given everything we've discussed, the resilience, the trade shifts, the enforcement issues, the long-term costs, what does this tell us about the real long-term effectiveness of economic sanctions as a tool in international politics?
And maybe digging deeper. If sanctions alone aren't the silver bullet, what other strategies or maybe complementary approaches might be needed to achieve those kinds of major geopolitical goals in our, incredibly interconnected world? Something to think about.